India Realty Congress, an event organized by ET Realty on 26th of May 2017, saw participation from the stalwarts of the industry to discuss the effects of RERA on the Indian real estate space. Among many eminent speakers present on this occasion was Joseph Lonappan, Managing Director of Marsh India. Marsh is one of the world's largest insurance broking company. The company was also the title insurance partner for the event. Mr. Lonappan, through his presentation, explained the working, products, services, and benefits of the title insurance provided by Marsh India.
Hi. Title insurance is one of those products which has been a very progressive development from RERA. This is a product which is available in most developed countries and developing countries. In India, as of now, till about 3 weeks ago, this product was not available. The good news is, title insurance now is made available in India. A quick introduction to who we are. Marsh is the world's largest insurance broking house. We represent the interest of about 80% of the Fortune 500 companies, and we place about $47 billion of premium globally. If you look at the commercial side, today Marsh India is placing about 3,500 crores premium, which is bigger than any insurance company in India on the commercial space. Coming on to the product. To understand title insurance, the first thing is we have to understand what exactly is title. Title effectively is the right that when you go ahead and buy a property, what are the rights that basically come along with that property? It could be the right to sell, right to lease, right to enjoy, right to inherit, and any such scenarios. What does title insurance do? Title insurance will provide a protection that if tomorrow you go ahead with a property with certain assumptions, and if a defect were to basically come out, which was not known to you, title insurance effectively will be providing you this cover. When we talk to different developers, they say, we have the best of title insurance lawyers, and when we go ahead, most of the things are discovered. The answer is, any insurance lawyer will give you a report with disclaimers. What does the title insurance policy provide? If the disclaimers go wrong, you basically get the entire money that you have incurred. Insurance of title is very different from most of the other insurances that people are used to. To give an example, today, if you buy insurance for your own automobile, you buy the policy today, the car hits with an accident tomorrow, you get the money. You basically go ahead with the policy for your health. If tomorrow you fall sick, you get the money. Title does not look forward, it looks backward. What it says is that if you purchase title insurance policy today, if there's something in the past which you're not aware of, which gets discovered after you purchase the policy, then whatever the losses you have incurred, the title insurance company will basically indemnify you for the same. This is a policy of indemnity. And this is one of the most progressive things which basically provides comfort to developers and the end consumers in the RERA regulation. Where does the need for title insurance comes in? What we have done is we have tried bucketing the different segments. First is the developers. With regard to the developers, it comes from the very regulation itself. Under Section 16 of obligation of the promoter, RERA effectively requires that the promoter should be buying different forms of insurances, including CR, which is construction all risk, and title insurance. This was the compulsory segment. What are the other segments where we are seeing a lot of interest on title insurance? The first one is the entire segment of private equity real estate. Every developer today, one of the biggest challenges that people face is effectively getting financing into this industry. Real estate private equity players, effectively, whenever they enter in India, one of the key challenges that they've had is the title issue. If you have a title insurance company, these are AA rated papers, effectively taking the risk of title, we have seen across different countries, the activity on the private equity real estate increases manifold, and it brings the much required liquidity and finance into the system. Second is housing finance companies. Today, India effectively has what we call income-based lending. So if I were to buy a particular apartment, I go to a bank, I ask for a loan. What happens? The bank will basically give me a loan, not based on the quality of the project, but based on my income capability. What is the salary I'm getting? And tomorrow, if there's something wrong in the project, I as an individual, I'm still liable to basically pay back the loan. What title insurance introduces to the banking sector is, it moves from something called the income-based lending to asset-based lending. So it allows banks effectively to give you a much better lending rate and security based on the structure of the project. So we have been in discussion with National Housing Bank and other people wherein we said, if the underlying class of asset, which is your housing, effectively has a better title, they should possibly look at probably even having a differential lending rate to such customers. Finally, the landowners. Today, a lot of projects, how they get developed, it's a joint development model. There's one party which is owning the land, and then you have the developer. Both join hands. If tomorrow there's something wrong in the title, of course the developer can say, I have a representation warranty from the individual landowner saying that the title is totally in place. But if the project starts, the rep and warranty fails, what do you do? For most of the landowners, probably the land that they're holding is the only substantial asset. And there's not enough of a capital basically behind that. What title insurance ensures is that A, it increases the speed of execution. And second, if something goes wrong with the title of the land, the developer effectively is not left in the lurch. I think probably we'll spend some time on RERA compliance. What does RERA require of a promoter? The RERA says that the promoter shall obtain insurance for different classes of business and pay the premium effectively for title insurance. There are two key things which effectively is spelled out in the regulation. First is transferring the benefit to the allottee. As soon as a allottee effectively enters into an agreement for sale, the benefit of insurance needs to be passed on to the allottee. So the program, like as and when you're doing the sales, you not only need to have a program of insurance for the entire land and building, but as and when each agreement for sale is entered, to the value that is being paid, this insurance needs to be transferred to the benefit of the allottee. The second thing effectively is transfer the whole program to the association of allottees when the completion certificate is done. So once the entire project is done, what the promoter has to do is, one of the obligations is that title insurance, which was purchased for that particular part of land, has to be shared to the association of allottees. There are two interesting things which basically come out from a RERA perspective. One is, when we speak to different developers, they effectively say, whenever we have a large parcel, it never gets developed into a single phase. You have multiple projects, you have multiple phases. We, as an insurance provider, effectively start breaking down, and each project effectively can have a separate insurance. Maharashtra, which is the most liberal, you can even define different number of floors as an insurance. Today, what developers are doing is, they are trying to break down project into as small pieces as possible, which could be a few floors or a standalone building, depending on what the local rules of the state say. What is the advantage of breaking down into smaller projects? The RERA penalty is implied as 10% of the project value. So smaller the project, as in, you're ring-fencing yourself against different risk exposures. Second thing which comes in is the duration of cover and responsibility of title. RERA holds the developer basically responsible for title till eternity. It is not time barred. So you have a concept, you go ahead, you develop, the entire project is sold, the land is transferred to the association of allottees, but you are still held liable for the title. 5 years from now, 20 years from now, 200 years from now. There is no exemption or time bar on limitation. What do you do in such scenarios? What we do is, what we have suggested to all our developers, that the title insurance, which effectively gets purchased by the developer, once you basically start handing it over to the association of allottees, in your contract you specify that the association of allottee needs to keep renewing title insurance every year, and the responsibilities with the association. So this way, there is more ring fencing around the title risk which a developer is taking. What is covered in title insurance? In a broad summary, anything that you're not aware of, which effectively gets discovered with a period of time, gets covered in title insurance. It could be fraud, it could be forgery, it could be an unauthorized transfer, it could be certain documentation which is lacking, or the lack of entries which are there in the whole process. What are the other things which title insurance will provide you coverage for? One of the biggest things that title insurance effectively provides you is the defense cost. Most of you who have been exposed to insurance, you will realize insurance presumes that you are guilty. And unless you prove yourself innocent, you never get the reimbursements. So if you have a liability policy or any other policy, first you have to defend, claim your innocence, and then you get reimbursements. The biggest benefit of title insurance is, from day one, it will come into your shoes and start picking up your litigation costs, even if the litigant is a genuine litigation or it's a fraud litigation. We have seen that as soon as a project starts, you will have a lot of parties effectively coming in and litigating, saying they have partial or complete rights into the project. Litigation can be a painful process, it can be a long process, and more importantly, it can be an expensive process. This entire litigation cost effectively under title insurance gets picked up by the insurance companies. The second thing which is covered is the out-of-court settlement. Not every settlement basically is reached in the court. A lot of times, the people are litigating. They're not looking at possession of the whole land. What they're looking at is some sort of money. And if there is some genuine interest, like we have seen in our experience globally, that you never have a scenario wherein it is an absolute clear ownership of title by another party. What happens is probably somewhere in the chain, something is mutated. Somewhere in the chain, something is defective. And in order to get this corrected, whatever is the out-of-court settlement, title insurance effectively will provide for that. The last one, RERA basically provides for something called an adjudicating officer and later an appellate tribunal. So tomorrow, as a consumer, if they effectively complain to RERA and they have losses because of title insurance, the title insurance company will defend, and whatever the verdict of RERA is, the appellate tribunal, it will be honored. And even if an appeal needs to be done, if there's a requirement of deposit which is there under RERA, insurance company will be paying that deposit and then taking it forward for appeal. What are the things which are excluded? Typically, the first one is any pending litigation. Title insurance is not a solution to all the known risks. The reason being that when you bought the property and there was something which was known to you, there was a commercial call which was taken that this is a risk that you're comfortable with. So any known risk or a pending litigation effectively is excluded from a title insurance perspective. Second, acts of the government. Today, right to property is not a fundamental right. So if the government were to basically take over the land, this is something which is not protected under title insurance. Third is claim to natural resources. If tomorrow it is found that the area is rich in minerals, oil and gas, and the government wants to take over, again, title insurance will not provide that. All actions of the government, like if there's a change in regulation regarding zoning, permits, FSI, that would not be covered. Outside of that, effectively anything which gets discovered, which is in the title chain, the title insurance company will be defending and indemnifying you for the same. What are the key policy conditions? Like any insurance policy, insurance is based on a policy of utmost good faith. So it is required that whatever is known to you on the risk of the title, that should be shared with the insurance company. Similarly, when you get a litigation, you are required to share with the insurance company that there's a litigation which is coming so that the best of brains and the best of experience effectively comes in to help defend your case. One of the key questions which always gets asked is when do people get the money back? When does a loss get paid? Title insurance is a policy of indemnity, and we have seen that in over 95% of the cases, the money effectively goes to the party which has bought in the litigation. So if you were an owner of the land and there's Mr. X, and Mr. X comes forward and says, I have a right or a partial right to this property, the intent of the title insurers would be to settle with that party which is litigating so that the defect is cured and you are provided title insurance or title security for the property which we thought or you thought was totally free of any defect. A lot of debate has happened on what is the value that one should go for title insurance, because throughout the country there are different models which exist. There's a pure outright sale wherein you buy the land and then you develop. There are situations wherein land has been available to you for generations and the development is happening right now. Third situation is you're going for a joint development or a redevelopment. In the first scenario, what we say is where the land purchase is recent, it is quite simple. You go ahead with whatever is the purchase value. Whatever is the value at which you have paid taxes and you have registered, that becomes the value of insurance. Second one, where the land belongs to you historically. Ready reckoner is the starting base at which you can go ahead with insurance. Third is the joint development model. This is one model wherein we have seen a lot of ambiguity, because people say, how do I arrive at the value of the land? Because the land is not owned by me, but what I'm doing is that I'm just doing the development. In this, the formula that we have arrived is that whenever you have a joint development, there's always a revenue share agreement. You say 20% of the revenue goes to the landowner, or 35% of the revenue goes to the landowner. So whatever the project cost, if that is 65%, it is presumed that the balance 35% is the cost of land. And on that basis, you go ahead with the insurance. Given the end intent of RERA is to provide protection to the end consumer, so the value of insurance effectively has to total to the value of sale for the developer. The reason being, your selling price is the cost price to the end consumer. And if tomorrow something were to go wrong with title and RERA were to rule in favor of the end consumer, it will be the value at which he purchased his apartment. The value of property is something which appreciates with time, and we have provisioned the policy wherein we have methodologies of escalation depending on what the curve of pricing cycle is like. Most of the insurance policies in India are annual in nature. You buy a policy of health, automobile, your buildings, anything. You buy a policy today, next it comes for renewal, you again pay the premium, again it comes for renewal, again you pay for the premium. With regard to title insurance, we have been able to secure a 7-year product. The primary intent of the 7-year product was, we realized generally if approvals are in place and the intent of most developers are right, the construction on the civil side does not take more than 4 or 5 years. Second, from an experience cycle, most of the litigations which happen globally and even in India happen in the first 3 years of starting your construction. So we have seen a dipping curve that the first 3 years you will have a lot of people coming into litigations because they believe there's money getting thrown into the project, we can probably get some money out. But after 3 years, it tapers down. So the product that we have launched in India comes with a 7-year validity with the option to keep on renewing till eternity as long as you want. So the option or the recommendations to the developer community is you go ahead with the product for a 7-year policy. If the project is completed, you have handed the document to the Association of Allottees, you should require in the agreement with the Association of Allottees that the Allottee Association keeps on renewing the policy so that the builder is absolved of any title defects which may occur in the future. What are the projects which can be covered? RERA effectively covers the ambit of both under construction and ongoing projects. So both the new and ongoing projects are provided insurance under a title insurance product. Whoever is responsible under RERA, which could be the promoter, the allottee, Association for Allottees, the entire gamut, whoever the right has to get passed on to, the policy effectively provides for that. How do you go about purchasing title insurance? Given that this is a legal product, the very first thing is that whatever is the title search report, when you bought the property, that becomes the first base document. So when you went ahead and purchased the particular property, it could be 5 years ago, 8 years ago, that document becomes the starting point. Second is a summary of all the ongoing litigations. Once these two things are available, our lawyers effectively will sit with your lawyers, do a due diligence, and prepare effectively the coverage that will be coming on to you. What about new projects? New projects, we believe that this duplication of lawyers is not required. Because for ongoing projects, you would have done a due diligence, but we will have a secondary diligence from a lawyer, which is a non-compete or a non-conflict to the first lawyer. But with regard to new projects, what we do is we collaborate with your lawyer. So you might have a preference for a certain set of lawyers. We also have a preference for a certain set of lawyers. We marry our preferences into one common lawyer. So this ensures there's no duplication of time cycle, costs, and the end product is much faster. What are the other decision points effectively which we are looking at? One is if a project is nearing completion, there's a greater sense of comfort which comes in. Second, what is the volume that a developer is going ahead? Greater the volumes, better the pricing works out to be. Third, what is the period that the last party who sold you had the land in possession? We have seen the likes of Godrej, Bombay Dyeing, wherein the land has been held for generations. That becomes the most attractive risk. There are other areas wherein the land is aggregated through farmers. 1 acre might have 40 farmers. This becomes a much more difficult legal challenge, and it becomes more time-oriented in order to basically get the terms out. The process effectively is very, very legal and engages lawyers across the country. In India, you don't have too many pan-India developers. Development happens in pieces. It happens in cities. You have a developer who is very big in Bombay. Probably he may not have presence in Delhi, Bangalore. You have a developer who's very big in Bangalore. Similar things. The same things happen even on the legal side. Every jurisdiction we have seen that there are certain lawyers who basically specialize on title. And what we do is we collaborate with the local experts in that region so that the diligence basically happens faster, is much more effective, and we forward the product to you. One key thing is the product availability. We are pleased to share that today this product is available in India. Marsh has a tie-up with New India Insurance Company, which is the largest insurer in India, and National Insurance Company, which is the third largest insurer in India. And we are making this product available to all the developers. This product is backed by international reinsurers, Lloyd's, which is the world's largest reinsurance body, which ensure the WTC, Titanic sinking, which has been there for 150 years. That is the capacity which is behind New India, which is supporting this entire thing. The last slide, besides title insurance, insurance can be a great enabler for the developer community. There are products which are available, like structural defect insurance. Today, RERA requires you to be liable for structural defect for a period of 5 years. It does not compulsorily say that you have to buy insurance, but the insurance market can take away the risk of the developer for structural defect. So there are products available in the insurance market which you can buy. Second is delay insurance. Whenever there's a project delay, you are held liable for the delay. Insurance market can provide a cover for delay for specific triggers. The triggers have to be accidental damage or any act of God peril. If any of these situations happen and there's a delay, we have a product available wherein you can cover the liability to your consumer for any delay penalty. Finally, reps and warranties. Whenever you're entering into a JDA, the landowner effectively gives you a lot of reps and warranties. Tomorrow, if the reps and warranties on title go wrong, we have an insurance product effectively which can cover you for that. Thanks a lot.